Hi there. So after going through the various discussion in the introduction to accounting, we now want to begin the journey with the double entry issue. Remember, as I mentioned, the duality concept is going to be the fundamental rule that is going to run through when we are solving or discussing the issue in relation to financial accounting. So what we want to do is to go through some few questions, and as I'm going through the few questions, I'll be telling you about the laws, the rules, and the principles that governs. Now, usually when it comes to financial accounting, one thing you need to understand is that we have what we call personal accounts and then impersonal accounts. Now, what are personal accounts? The personal accounts are the accounts that relates to individuals and companies. So the personal accounts are used to record transactions that are affecting individuals and companies, right? That's the personal account. So when we are dealing with the personal accounts, the rule is that if it is a personal account, we would debit the receiver and then credit the giver. So that is the principle for what? Personal account. So if for instance I say Kwame sold goods on credit to Kofi. Kwame sold goods on credit to Kofi. So Kwame is the one giving. So we would debit Kofi's account in the book of Kwame and credit Kwame's sales account. And we're going to be practicing a couple of double entry, and I'm going to also add a couple of them to you that you can practice on your own so that you understand the double entry principle correctly. Now, if you're able to understand the double entry principle correctly here, then when you are dealing with financial reporting in the level 2 and corporate reporting in the level 3, it will be easy on you and you wouldn't have to struggle any longer in relation to that. So that is about the personal account. Now, under the personal account, I think I've mentioned this already in the introduction video, where we said that there is what? The debtors and then the creditors. So that is the personal account. Then we have the impersonal account. The impersonal account has to do with any other transactions that are not recorded in the personal account. So this is where things such as sales, expenses, assets acquired, and all other items, revenue, income are recorded into the impersonal accounts. Now, usually, whatever it is, we are going to be going through it and we will solve some questions and find out how we can do the treatment for all of that. So let's start with our question. Example 1, as you can see there, relating to Christine. So the following are the transactions of Christine's business during her first month of trading. The following are the transactions of Christine's business during her first month of trading. So we just put the name up there, Christine's. That is outside the camera, right? So let's adjust, or I'll just write down, don't worry. Record each transaction in T account. So we are supposed to record each transaction in the T account. A. The business buys a car. A. Christine starts a business and pays $5,000 as capital. Christine starts a business and pays $5,000 as capital. So what are the accounts involved in this transaction? Christine starts business and pays $5,000 as capital. Now, when you start a business, the money you use to start a business is certainly called what? The capital. So what are the two accounts involved here? We're going to be opening the capital account. So this is the T account. We open the capital account, and then we are told he paid $5,000 as capital. Now, if the person is silent like this, we are going to treat it as what? A cash transaction. So we open capital account and then also cash account. Maybe I can put that below. We bring our dollar signs here. As I mentioned in the introduction video, the left hand side is the debit and then the right hand side is the credit. Now, when you start a business with some money, I told you that capital account always keeps what? A credit balance. So what is the double entry for starting a business with cash? We debit the cash account and then we credit what? The capital account. So we debit the cash in the name of capital, $5,000, and then we credit capital in the name of cash, $5,000. If it had said started business with capital of $5,000 at bank, then it will be a bank account and then the entry would still be what? The same. Alright? The entry would still be the same. So that's the first thing we do. Second, the business buys a car for $1,000 cash. The business buys a car for $1,000 cash. So this is a car. A car is a non-current asset. So we need to open a car account. But we are paying with cash. So money is going out of what? The business. So we're going to open the car account. So we open car account. And car is an asset. And by now, you should know that all assets keeps debit balance. And since part of this money that we have, we are going to be paying it out for the car, we credit the cash account. So the double entry is we will debit the car account and credit the cash account. So cash in the name of car, 1,000. Car in the name of cash, 1,000. So that is how the second entry is made. Third, they buy goods for resale for cash, $500. They buy goods for resale for cash, $500. Now, when we buy goods for resale, that means that is what? Purchases. So goods that are bought for resale, we record it in where? The purchases account. So we're going to open the purchases account because it's for resale. Now, what is the double entry? We are buying with cash, so we will credit the cash account and debit the purchases account. Remember, I also told you that the purchases account always keeps what? A debit balance. The purchases account always keeps a debit balance. So we're going to debit purchases in the name of cash, $500, and then we credit cash in the name of purchases, $500. So that is what you need to understand about that. Next one. They buy more goods for resale, $600 on credit from Mr. A. They buy more goods for resale for $600 on credit from Mr. A. Now, when we are buying on credit, still it is purchases. Okay, we are buying goods for resale on credit. It is still purchases. But this time around, we are not paying with cash. We are buying on credit. Meaning we're going to have what? Creditors here. So, let me come here. And then I will open Mr. A's account. And since we are buying on credit from Mr. A will become our creditor. Are you getting it? Mr. A will become our creditor. And as I told you, creditors always keep a credit balance, right? Just as they are named. So, purchases account will be debited in the name of Mr. A. And the amount is how much? 600. And then we credit Mr. A's account in the name of purchases. And the amount is 600. I hope you are following and you are picking it up, right? Next, they pay rent of $200 cash. They paid rent of $200 cash. Now, rent is an expenses, okay? So all expenses also keep what? A debit balance. So what do? We open the expenses account. The rent expenses account. And so since all expenses keep debit balance, what do? We debit the rent account in the name of cash. And how much was it? $200. And then we credit cash in the name of rent, $200. So that is how we do the entry for that transaction. Next, they sell half of the goods for cash, $800. They sell half of the goods for cash, $800, meaning the organization undertook a cash sales. So if there is a cash sales, what do we do? What do we do when there is a cash sales? We're going to open what? The sales account. Maybe let me narrow this down a bit. So we will open the sales account because we are selling our goods, okay? So when we are selling our goods, the entry goes into the sales account. So we sold the goods for cash. So sales account always keep a credit balance. So money is coming into the business, hence we will debit our cash book and then we credit what? The sales account. So we credit sales account in the name of cash. How much was the figure there? $800. Then we debit cash in the name of sales, $800. So this is how we do the entry for that question. Next one. They sell the remaining goods on credit for $900 to Mrs. X. Alright? They sell the remaining goods on credit for $900 to Mrs. X. So we are still selling, but this time around we are selling on credit. Meaning the person we are selling to on credit becomes our debtor. And as I mentioned, all debtors keep what balance? A debit balance. So we continue from here and we will open Mrs. X account, right? Slashing our dollar signs. So what do? Debtors keep debit balance. So the double entry for goods sold on credit is that we will debit the debtors account and what? Credit the sales account. And that is 900. So we're going to have Mrs. X here, 900. Then we will debit Mrs. X account in the name of sales, 900. Sounds good? So this is how we work out, alright? This is how we work out. Next one. They paid $400 cash on account of the amount owing to Mr. X. Now remember, we had bought from Mr. X some time ago, $600. And now the transaction is they pay $400 cash on the account of the amount owing to Mr. A. Owing to Mr. A. So we had bought $600 from Mr. A. Now we are paying him $400. So when we are paying, what is the double entry? We debit the receiver, credit the giver. So what do? We debit Mr. A's account and credit our cash account because money is going out of the business. I hope you are getting the idea. So in Mr. A's account, you do cash and we are paying him $400. And then we will credit our cash in the name of Mr. A with $400. Next item. They receive $500 from Mrs. X. Remember, Mrs. X had also bought from us. So now she is paying us. That is a personal account transaction. So we debit the receiver, credit what? The giver. Who is receiving? We are the ones receiving, so we're going to be debiting our cash book. Mrs. X is the one giving the money, so we credit her account to reduce how much she's owing us. So a cash of $500 and Mrs. X $500 here. Then the last transaction there is Christine withdraws $100 cash from the business. Christine withdraws $100 cash from the business. Now, if the owner of the business, that's the proprietor, withdraws money for personal uses or for personal use, that means it is what? Drawings. So we treat that as what? Drawings. So we're going to open drawings account. So she withdrew the money, maybe she used it for something, maybe her birthday party or something like that. At least it's her business, so she's at liberty to withdraw the money. Now the drawings account keeps a debit balance all the time. So what do? The cash will reduce. So we're going to be crediting the cash account in the name of drawings, $100, and then we debit the drawings account in the name of cash, $100. Okay, so this is how we undertake the first question on double entry. Okay, it's not difficult, right? So understanding of the transaction, when you read a transaction, the first question you need to ask yourself is, what are the accounts involved? Then you find out, once you know the accounts involved, you will ask, who do I debit, who do I credit, right? But fundamentally, accounts such as purchases keep debit balance all the time. Sales keep credit balance all the time. Where is my sales account? Keeps credit balance all the time, right? Assets, all non-current asset bought, keep what? Debit balance all the time. Our creditors, they keep credit balance. Our debtors, they keep what? Debit balance in relation to that. So this is just a teaser, an introduction to what really has to be done about double entry. So this is the entry. Now when we finish with the entry like this, we need to balance the account, right? Remember I told you about it in the introduction to the lecture. So we balance the account by looking at the debit side and the credit side and finding out which side is bigger. Okay, so we look at the debit side, okay, and the credit side and find out which side is bigger. The side that is bigger becomes the basis. So if you check, this is 600, this is 400. So the 600 becomes the basis. Okay, then this one is short. So we're going to bring balance carry down there, and the difference is what? 200, and that one comes here as balance brought down, 200. So you see that the balance brought down is on the credit side. That is why we say creditors keep what? A credit balance. Okay, that's what you need to understand. But where a creditor keeps a debit balance, meaning they owe us, okay? So traditionally we are supposed to owe them, but if they now owe us, then certainly they are going to be keeping what? A debit balance. Then the rent account, I think that's the only item there. So we just soup it up. Balance carried down 200, and balance brought down will be here as 200. And I mentioned also that all expenses accounts keep debit balance, and rent is an expenses, so it keeps a debit balance. Then we come to the sales account. Almost always the entry is going to be just on that side all the time. So 800 plus 900, that's 1,007. 1,007. So we're going to have balance carried down here, 1,007. Then we have balance brought down here, 1,700. So you see that the sales account is keeping a credit balance. Then let's go to the rest, the capital account. Let's balance it up. Capital account also keeps a credit balance. And then let's come to the car account. The car is an asset, so certainly we expect it to keep a debit balance, right? So balance carried down here, the brought down will come here. Then the purchases account, we said that it should always keep what? A debit balance. So 500 plus 600, that's 1,001. 1,001. So we're going to have balance carried down here, 1,001. Then balance brought down on the debit side, 1,100. Then we go to the drawings account. It's just a single item. So balance carried down will be 100. And then balance brought down also 100. So that is the drawings account. Then we go to Mrs. X, who is a debtor. And then we balance her account as well. Which side is bigger? 900 and 500. Which is bigger? 900. So we're going to put the 900 here, 900 there. And so balance carried down is 400, the difference. And then balance brought down is going to be 400. So you see that Mrs. X's account is having a debit balance, and so she is a debtor. All right. Then we come to the cash account. Let's see how we balance that up. When we add the debit side, it's going to be 6,300. So I think that is the biggest. So 6,300, 6,300. So we're going to have balance carried down here. So this is 1,500. This is 2,200. So 2,200 from 6,300. That should give you 4,100 as the balance carried down. And so balance brought down is 4,100. So this is what we mean by double entry, all right? T account, double entry T account, where the examiner gives us transaction and we are posting it. So here, what we are doing is just testing our double entry understanding. This is very important because if you don't understand the double entry well, you will struggle when we are looking at suspense accounts or correction of errors and suspense accounts. So it is very important for you to understand this very well because it is going to set as the benchmark on which we're going to build on other areas. Then also, when we are preparing the financial statement of companies or for sole trader and there are incomplete records, certainly the idea of double entry is going to also be called, and that is where the examiner is going to require you to do a couple of workings. So that is what you need to understand about question 1. So let's go to question 2. Western traders. Okay, I think I have it here now. So let's look at question 2, Western traders. So Western traders, question 2. The following are the business transactions of Western traders for the month of May. The following are the transactions of Western traders for the month of May. So let's go to the requirements and find out what the examiner said we should do. Required. You are required to record the transaction in the books of accounts. So we are required to record the transactions in the books of accounts. So what we're going to do is to record the transactions. Now, the way I want to solve this question is to put the transactions in their various ledgers. So we're going to have sales ledger, then we will have purchases ledger, then certainly we will have general ledger. All right? So we're going to do it in that way so that you kind of know how to classify all the transactions. So let's put here our sales ledger. We don't know how many transactions there is. Then we can put purchases ledger here. Okay. Then let me put general ledger here. Hey, I hope that's not out of view. General ledger, right? That's what is up there. So when we read a transaction, we will ask the accounts involved and we will ask which ledger to record the transaction. Okay, so let me scroll back to my question. 1. So May 1, started a business with capital of £7,500 in the bank. Started with capital of £7,500 in the bank. So here, it's capital account and what? The bank account, right? Because yes, you are starting a business with capital, but this time around the money is not in the bank. So you see the difference between this one and the first question we saw? The first question, the money was in cash, or the examiner was silent, so we assumed It was cash. Now, transaction relating to capital and cash cannot be recorded either in the sales ledger or in the purchases ledger. So certainly, we're going to go into the general ledger and we're going to open capital account. And then the bank account. So capital account, bank account. And we are dealing with pounds here. Now, as I mentioned, capital accounts always keep what? A credit balance. So we're going to credit the capital account in the name of bank, and that's 7,500. And debit bank in the name of capital, 7,500. So that's the first transaction. Second, May bought goods, £1,000 paying by check. May bought goods, £1,000 paying by check. So if we bought goods and we use check to pay, that means what? Purchases account. And purchases account is also entered in where? The general ledger. So we're going to open purchases account. So we slice that up. Maybe let me leave this space. I don't know how many transactions that we will be having because my board is almost getting exhausted already. Okay, so I'm just going to clean the purchases ledger. I'm going to slash this into two and put purchases ledger here. Okay, so I'm going to put purchases ledger below so that I can have general ledger across here. So we have this purchases account. So let's open purchases account. So purchases account. What balance does the purchases account keep? Do you remember? A debit balance, right? And we are paying with cash, so money is going out. And we are paying with $1,000. So we credit the bank account in the name of purchases, £1,000. And then we debit purchases in the name of bank, £1,000. So do some broken lines here so I can manage my space properly. This place is too tiny. It's okay, let's go. Third, on 4th May, goods sold £750, a check being received. Goods sold £750, a check being received. Immediately you sell goods, what account is involved? The sales account. So just below the purchases account, let's open the sales account. And that's pounds. And we sold goods receiving a check of £750. So money is coming into the business. So we debit the bank account in the name of sales, $750. Then we debit sales in the name of bank, $750. Right? So that's how we do the entry. Next one. May 6th May. Bought shop fittings for £2,000, paying by check. Bought shop fittings. Now, shop fittings is an asset, okay? It's an intangible asset, like a kiosk, like a shop. You bought a shop fittings. So that is an asset. So we need to open what? The shop account, shop fittings account, and certainly that also goes in the general ledger. So let's put that here. Shop fitting account. Now, so shop fitting is an asset, and we are paying a check of $2,000. So we debit shop fitting and credit what? The bank account. So this will be in the name of bank, £1,000, and then we credit bank in the name of shop fitting, also £1,000. Oh, it's 2,000 rather, not 1,000. 2,000. Next, 7th May. Bought goods £1,250 on credit from Bristol Suppliers Limited. Bought goods £1,250 on credit from Bristol Suppliers Limited. So here also purchases, but this time around you are buying on credit. Now if you are buying on credit, that means what? Data is coming into the picture. So that debtors figure or debtors account goes into where the the purchases ledger. Okay, let me take that again. Bristol is someone who buys goods from on credit. So when you buy goods from somebody on credit, the person becomes what? Your creditor. So the person's account, which is called the personal account of the person, comes into where? The purchases ledger. So in the purchases ledger, we're going to open Bristol's Suppliers Limited. So Bristol Suppliers account, dealing with pounds. Remember, we have bought goods from what? Them. So what do? We debit our purchases account and credit their account. Remember when we bought earlier and we paid, the credit entry was in the bank. So now that we are buying on credit, we will credit their account. So you see how this thing is. It's not something that is difficult. So this is going to be Bristol. How much did we buy? 1250, I think so. And then we'll credit Bristol in the name of purchases. 1250. Next, May 10th, paid rent £750 by check. Paid rent £750 by check. So what is rent? Rent is an expenses, right? And all expenses are recorded in the general ledger. So we go to the general ledger and we open the rent account. So we are paying by check. So we credit our bank account and debit what? The rent account of $750. So rent will be here, $750. Then we debit this guy in the name of bank, $750. Next one. May sold goods £1,000 on credit to Gonado Giftware. May sold goods 1,500 on credit to Gonado Giftware. So we are selling goods on credit to a company, Gonado Giftware. So what do? When we are selling on credit to somebody, the person becomes what? A debtor. And debtors' personal accounts are kept in the general ledger. So we're going to take this transaction and slash it into the general ledger. And in the general ledger, we're going to open that name. What was the name, folks? Gonado Giftware. Gonado Giftware. So we open the account in the sales ledger. But remember, we are selling goods, so we credit. Hey, I made a mistake here. The 750. I should have credited the sales accounts. You know, I debited here, so I'm supposed to credit it. 750. Sales accounts cannot be debited unless there is an error. So now we bring the name of the company, Gonado. We sold to them of, how much did we sell to them? 1,500. Then we go to Gonado's account and debit Gonado's account in the name of sales, 1,500. So that is the entry if we are selling on credit. Next one. 14th May. Return goods 150 to Bristol Suppliers Limited. Remember, we bought some goods from Bristol Suppliers. But now we are returning some of the goods to them. So when you return goods to your supplier, it is referred to as what? Returns outwards. Okay? Return outwards. So the goods we are returning will go into the return outwards account in the general ledger. So meaning we need to open returns outwards account. So what is how is it going to be? This is a personal transaction. So we debit the receiver, we credit the giver. So we're going to be debiting Bristol suppliers because they are going to be receiving the goods, and then we'll credit the return outwards account. Okay? So that's how it's done. So Bristol, and we are returning 7 or 150. And so we debit Bristol's account in the name of returns outwards 750. Okay? Next, 16th May. Paid wages 1,005 by check. Paid wages 1,005 by check. Now, what are wages? Wages are also expenses, and all expenses are recorded in the general ledger. So let me put that down here. Wages account. And so we debit wages and credit bank. So we pay wages $1,005. So we will credit bank in the name of wages 1,500. 18th May. Paid the amount owing to Bristol Limited by check. Paid the amount owing to Bristol Limited by check. Okay, so how much do we owe Bristol Limited? You realize that with Bristol suppliers, we bought goods. How much good did we return to Bristol? 150. And I put 750 here. It's supposed to be 150. Okay. We bought goods worth 1,250. Then we returned 150 to them. So the examiner is saying that we pay the amount owing on their account. So if I'm owing you 1,250, then I brought you goods worth 150, then how much is left? It's going to be 1,100. So meaning the money that was paid to Bristol Limited, which means we're going to be crediting the bank account in the name of Bristol with 1,100, and then we will debit Bristol account in the name of bank with 1,100, because that is what will be the amount outstanding as at the date we are making the payments. May 16, paid the amount. Okay, that's what we did. 21st May, Gonado Giftware returns 250 goods. Gonado Giftware returns 250 goods. So who is Gonado? Gonado is our debtor. We sold to him sometime in the past, and they are now returning what? Some of the goods. So if they are returning some of the goods, what do we do? What we do, if we are receiving goods from resale, from goods sold, that is referred to as what? Returns inward. So we're going to open the returns inward account. So returns inward account. And return inwards like a personal account. So we debit the receiver, credit the giver. So we are the people receiving. So return inwards keeps what? A debit balance. So we debit the return inwards account in the name of Godano rather, and they returned £250. Then we credit their account in the name of returns inwards 250. I hope you are following. 24th, paid rent 750 by check. Paid rent 750 by check. We already have a rent account here, and we are making another payment. So we just repeat that. So bank 750, rent 750. Next one. May, so 26th May. Sold goods 550, a check being received. Sold goods 550, a check being received. So we sold goods and we are receiving a check for that. So what do? The sales account in the name of bank, and that is 550. So we receive money in the name of sales, 550. So that is the entry for that. Next one is 28th May. Received a check from Gonado Giftware for the amount owing. So if we check right now, Gonado bought 1,005 and they returned 250. So how much is outstanding on their account now? It is going to be 1,250. So that is the money we are receiving from them. So bank 1,250. Then that will come in the bank account from Godano, 1,250. So that's all about that. Very simple, sweet, straight to the point, right? So let's balance the accounts briefly and see what we can do. Now this is going to be balanced because it closed. There is nothing outstanding inside, so it's closed because what is here is the same as what is here. Godano's account to the same thing is going to be balancing. There is nothing, the figures are the same, so this is closed. Then we come to the various accounts here. Return inwards. Going to have balance carried down here, 250. Then balance brought down, 250. Sales account, when we sum this figure up, I think we should get somewhere around 2,800. So the same figure is supposed to be here. So this is going to be balance carried down 2,800. Balance brought down 2,800. Then the rent account is going to be 1,005, 750, 750. So balance carried down is 1,005 here. Balance brought down 1,005. Return outwards is 150. So we're going to have balance carried down here 150. Balance brought down 150. Then we come to the wages account. It is 1,005. No two ways about that. Okay. Balance brought down 1,500. Shop fitting, it's one item, 2,000. So balance carried down will be on the credit side, and then balance brought down will come to the debit side. Purchases account, 2 items, and that is going to be 2,250. So balance carried down will be on the credit side, 2,250, and it will come to the debit side as a brought down 2,250. Then we go to the capital account. It's a single item. So balance carried down 7,500. The balance brought down 7,500. So that is how you go about that. Then we come to the bank account. So how do we balance the bank account? We add the debit side and then the credit side together, right? So when we add the debit side, it is 10,050. The credit side, it is 7,100. So the debit side is more than the credit side. So 10,050, 10,050. So balance carried down, when we subtract, it's supposed to give us 2,950. That will be here as balance brought down, 2,950. So this is how you account for this transaction in the books of the company. Now, the final thing I want to touch on about this is about the double entry principle is the extraction of a trial balance. So if we say from this question we want to extract a trial balance, how is it going to be like? So let me do that here. So if we are extracting a trial balance, as I told you earlier, trial balance is just going to be particulars. So we can put on top trial balance. Then we just have the table like this. So we have debit here and credit here. We have the currency sign. Now remember, Godano and then Bristol accounts closed. So There was no balance brought down, there was no balance carried down, so they won't come in the trial balance. But purchases account will come there, so purchases. Now purchases keeps a debit balance, so the figure there they brought down is 2250, we bring it up. Then we bring sales. Sales keeps a credit balance, and the figure there is 2800. Then we come to return inwards. Return inwards keeps a debit balance, so the figure is 250. Then we go to shop fitting. Shop fitting is a non-current asset, and all non-current assets keep a debit balance, and so debit side 2000. Rent is an expense. All expenses keep debit balance, so 1500. Return outwards has a credit balance, so returns outwards has a credit balance of 150. And then wages is an expenses, keeps a debit balance of 1500. Capital account, certainly a credit balance of 7500. Then the bank account, which keeps a debit balance of